Welcome back to the program. It's Capital Market, live on Channels Television. We acknowledge the fact that there's one more trading session left in 2018, and that's 31st of December, Monday, which is so happens shortly, of course. But however, it's not certain if that will change the records that we've seen of the market so far this year. 2019 is just a few hours away. What does it have in stock for investors and, of course, viewers that are watching right now? Ayode Jebo from AfriInvest Securities is still with us here. So let's get some forward guidance from you now. 2019, few hours away from now. You touched on it a little bit in the first segment, talking about the fact that this trend that we're seeing in the market is likely to continue. What do you mean by that?
Yes, starting from the fixed income market, we expect that there will be continued pressure on FX. And when you look at in terms of the major objective of the CBN or focus right now is to ensure that there's exchange rate stability. So we would see more aggressive mop-ups, OMO mop-ups, which may lead to CBN increasing the rates. We expect that maybe before we approach election, we may still see about 50 basis point increase in the long OMO maturities. And we also look at in terms of the fixed income bond market, yes. We'll feel that we'll continue to see interest. The yields will not go significantly beyond this current level of 15%. But when you look at in terms of the for corporates, most of the corporates won't be able to come out to issue either corporate bonds or commercial paper.
Why? As a result of liquidity tightening?
No, as a result of this high yield environment, because it will not be attractive. It will not make any financial sense coming out at this level. And but say for CBN, there's a program of a risk sector facility that for A-rated companies, for few companies may take advantage of that, where CBN will be able to buy bonds at single-digit rates from corporates. Yes, some companies may take advantage of that in 2019. Right. And when we switch to the equities market, we feel when you look at how market has performed few months before election, look at 2011, 2015, we discovered that market has dipped between 4 to 5% before the election. And when next year, that's 2019, may not be different. So we may see further decline as we approach the election. However, it's going to be depending on how the election swings. If it's the APC in terms of expectation, in terms of the growth rate, may not be as aggressive. If it's the PDP because of more private sector delivering initiatives that the PDP has. And if it's the PDP, that's a new government that comes in, that will take more time. That will increase the uncertainty that would have in the markets because you will need to study in terms of what their major policies. Because most times we've seen that manifesto differs from the actual policy that's been implemented. So you may have very robust manifesto, but when it comes to reality, and you may not be able to implement some of those things that earlier be projected. However, if it's the APC, you expect, though growth expectation may be lower, but in terms of certainty, you are sure in terms of how policies will continue to be channeled. But it's also important to note that we'll be having a new CBN governor in June next year. That is also very critical.
Is that starting already?
Because we may, let me just say we may, because
the Emefiele might just retain its position.
We've not seen that in terms of when you look at the history of CBN governors. We've not seen that. But that would also help in terms of that would determine especially for foreign investors, would like to understand in terms of the policy initiative of if it's a new CBN governor, they would like to also understand that. So that may slow in terms of the influx of capital in the first half. However, once we see those clarity in the second half of 2019, in terms of the direction of election, and also in terms of the new CBN governor policy initiatives that have been set up, we feel that may boost and may improve interest, especially from the foreign investors, because the way Nigeria works, 4-year cycle, so they know they have another 2.5, 3 years to play in this market. And with we expect that there will be more borrowings next year domestically because it's becoming unattractive to raise debt globally. You know, the last one Eurobond that was raised around 12-year instrument was raised around 9%, relative to 7% in February. So we expect, with the expectation that the U.S. Fed may still, in 2019, may increase rates by 2 or 3 times, that will also make it more expensive to raise funds abroad. And domestically, you look at, in terms of the budget deficit, about 2.3 trillion. It means that government will need to raise those funds in Nigeria, and that may drive rates higher in 2019.
So they may not externalize anymore, the debt strategy.
It's becoming unattractive. You also see, when you look at the corporate Eurobond, that has reduced from about 3.7 trillion in 2017 to about, I think, less than 3 trillion now. Diamond Bank and Access Bank will be maturing in 2019. Yeah. That we don't expect that we may not see new issuance from the corporates, especially the banks have been the major sector or that have been taking advantage of the Eurobond market. So in 2019, it's really going to also be a game of 2 halves, where in the first half, election will play a major role until inauguration, and as well as the new CBN governor. Then when we get into the second half, we'll see more clarity, and that will help shape both the equities and the fixed income markets.
How will the oil price, as we've seen now, and the way to pan out next year, when OPEC is asking us now to, start cutting down our supply or our output, how will that shape the market for us?
Yeah, for us, when you look at in terms of the budget benchmark at $60, yes, that's based on what has been proposed to the House, $60 per barrel. And when you look at the current price at which crude is trading, so for it may be a major challenge in terms of our revenue. When you look at based on actual revenue, it's around 53–54% actual in terms of achievement so far. So that may be a major concern even for foreign investors, because the accretion of the reserve may not be as fast as we saw it this year on the back of higher crude oil prices. So it also has a major factor that it will play in terms of shaping foreign investor sentiment, as well as for domestic and institutional investors.
Do you think that we are already having the impact of the poor accretion in reserves? Because again, the last Eurobond borrowings that we did seem to be what has been able to help shore up the reserves in recent times. So is that the kind of trend that we will also see in 2019?
Yeah, we would see major trends that we may not see significant accretion in 2019, and CBN would continue to defend in the Naira. But based on the levels where we currently are, we still feel it's at a comfortable level. It's above 6 months of import. Right. But when we begin to get to a level where reserves is touching about $35 billion, that would begin to raise concern, and there may be pressure and the need for a devaluation.
I'm going to ask you one last question, and I need a yes or no. Do you anticipate a devaluation next year?
Yes.
Thank you very much for your thoughts on the program.
You're welcome. Thanks for having me.
Thank you so much. You're the last guest we're having for this year. It's an honor to actually have you on the show. Thanks a great deal. Ayodele Ebo is the Chief Executive at AfriInvest Securities Limited. That's all the time we have this weekend, and for 2018, our last edition of the program. Thank you for being a part of it. I'm Temple Ashaju. I'll see you next time. Bye for now.